I'm David Usel, and I'm a tax shareholder with Perkins and Company. We're a full-service accounting firm, the largest local firm in Portland. I've been with them since 2004. My area of expertise really is I focus on high-tech emerging and growth companies and help them through their life cycle all the way from inception to exit. I've worked at a couple of different accounting firms, and the first accounting firm I worked with, I had a chance to work with a company called KeyTrack, and this is back in Florida. And they had this is one of those aha ideas. Okay, so what they did was they developed this computer tray, a tray that it was for car dealers. So one of the problems car dealers had when you came into a car and you wanted to look for a car, they couldn't find the keys. So they set up a computer base, a computer terminal with a tray that had cards with a key on it, pretty simple, and it would just, so the salesman would have to put in their password to be able to pull out that key. So that's pretty cool in itself, but what they realized is that they developed a database behind that where they could get all the information, and now the dealers and the car makers were like, hey, who's test driving this car the most? Who's test driving this car the most? And they had all this data and they were able to sell it back to the car dealer. So that was like, as an accountant, it can only get so exciting, obviously, working with numbers and things like that. So I really enjoy just being able to sit down and sort of figure out, so how did you come up with this idea? And I like to understand what makes certain companies successful, why they were successful, why they weren't successful, and that sort of thing. So, I just enjoy learning cool stuff. A lot of startups start out, in someone's garage, so it's a sole proprietorship. They may put on their Schedule C, and I would recommend that if you're trying to keep it really simple, so it's just on your 1040. But I think as soon as you bring in somebody else and say, hey, I'm going to bring in somebody else and we're going to found this company, I think that the choices are really an S corp, a C corp, or an LLC. And sort of the big picture, an S corp is a corporation that has flow-through treatment, and you can only have 100 shareholders. And so if you're two people that are going to really bootstrap it and you have a revenue source and you don't really see yourself getting outside funding for a period of time, I would say an S corp is a good model to have because it flows those losses that are going to be typical in a startup onto your personal return. If you're going to get outside funding pretty soon, a C corp would be preferable because only certain types of entities can be an S corp shareholder, mainly U.S. citizens of the United States. So if you're going to have a corporate or a venture fund investing in you, or someone invest through their own corporation or something like that, then that's really, you need to be a C corp. And then an LLC, I think it really depends. That also has flow-through treatment, but I tend to stay away from LLCs for startups because an LLC usually has what's called an operating agreement, and an operating agreement can be very creative. You can give losses to people early on and give losses to people later, and it can be somewhat creative, but with creativity it creates complications. And I've seen so many times where, hey, we start this LLC and all of a sudden you have 10, 15, 25 members, and these guys came in at a certain price and they're supposed to get this preferred return, and these guys came in at a different price, and you're doing a tax return and it takes like twice as long to do. It takes a lot longer to do a tax return for an LLC than it does for a C corp, for instance. I think QuickBooks in general for the startup can last a pretty long time. I think typically if your startup is involved with having inventory, I think you'll probably have to, once you really start selling inventory, you'll probably have to move on to something more robust than QuickBooks from that standpoint. From a bookkeeper standpoint, I think if you or your founder has experience with QuickBooks, I think as long as you don't have revenue, I think you can probably get by with doing it yourself. However, I think as a startup, you're going to spend a lot of time as an entrepreneur, and I think you should be doing what you do best. You shouldn't be worrying about your books. Even hiring a bookkeeper like to come in once a week or once every 2 weeks can really get things done a lot faster than they can probably get it done. So I think it's always good to keep organized from the beginning, because the longer you let it go, the more it'll cost you down the road. When it comes to CPA, I think it really depends on if there's any questions about sort of what type of entity you're going to be. So, the first thing entrepreneur typically does is hire a quality attorney that sort of incorporates them and sort of can also walk through those issues. But it's always a good idea, I think, that if there's any doubt what kind of entity you should be, I think it's always good to talk to an accountant and say, hey, I'm thinking of being an LLC, I'm thinking of being an S corp, I'm thinking of being a C corp. Can you just sort of walk me through what that means? Because I think they hear about a lot of stuff like double taxation or flow through, one level of tax and that sort of thing, and they might think that something's easier than it really is, if that makes sense. And so it's just having someone map that out, and all it takes is like 1 or 2 meetings, and then they can go, okay, well that's all the clarity I need, and you may not even have to talk to that CPA until you get your tax return done, at the end of the year. I think what I enjoy the most about Portland and startups is I think there's a groundswell across the board that everyone involved in the startup community wants everyone to do well. I think that there might be some things that people might consider lacking compared to San Francisco or Seattle, but I think that people genuinely care. I think there's VC funds that are here, I think entrepreneurs that are here, I think the service providers that are here, I think they all want everybody to be successful, and there's not really this hyper competition between startups as far as like, I'm going to be successful and I don't care if you are or not. And I think in general everyone is really giving of their time. I think that I'll meet with almost anybody. I think that there's a lot of folks out there that will really help an entrepreneur out if they ask. And so I think that it just creates a nice growing environment. I think if we just had a couple successful mega exits that created a new line of wealth, I think it would have a great trickle-down effect. I think that there's what we lack is there hasn't really been in a long time sort of that slice of individual that were all working for a particular company that had a very successful exit, and now they have a lot of money that they want to be able to give back to the community. I think there's a lot of angel investors that have been angel investors for a very long time, and I think that they've given a lot of money to a lot of startups in Portland, but they've sort of, now they're focused on other things. And it's sort of, angel money is like monopoly money. I mean, it really shouldn't be like, hey, it's my life savings. It really should be just money that they want to play with. And so over time, that sort of runs out if you're getting up in age. So I think if there were a couple pretty successful exits where you had a lot of employees from a particular company be very successful that said, hey, Portland was great to me. I want to be great back to Portland. I think that's a bit important. So.